Welcome to Novacast. I'm Elizabeth Evanisco, and with me today is a special guest, Hammid Firoozeh, with Ocean Park and Sierra Asset Management. Really excited to have him. Hammid and Ocean Park have been a part of our portfolios for some time now, and just wanted to invite you in today just to kind of have a little bit of a recap as to what happened last year, what we can expect this year, and kind of get a take for what you are seeing. So let's start with 2023. Crazy year.
Absolutely.
So,
Absolutely.
the market was up, down, everywhere in between.
Yes.
Take us through it a little bit if you don't mind.
Yeah, I think that's a great question, Elizabeth. So 2023 was wild. And I think what sets up 2023, a good way of walking into 2023 is talking about 2022 first, because 2022 was extra wild. We had a brutal year in the markets in 2022. The fixed income markets, as many know, had its worst performance year in recorded history. So it was a very, very tough year for investors. Equity markets were down too, and rough. And we walked into 2023. There was a lot of choppiness. We saw markets that couldn't really find their footing for a little while, but in the end persevered and gave us some nice gains. We saw a Fed that kind of was able to keep things pretty calm in 2023, and we were able to pull out a positive number. The markets were for both the fixed income markets and the equity markets through that, and I think most of that came towards the latter part of the year where we saw a big move up. But 2023 was not an easy ride. It was pretty wild in itself.
So, sidestep, I want to dig just for a minute because your firm, Ocean Park, is a little different, right? We've had some podcasts in the past that we've focused on what's called tactical management, which is really where you guys, stake your flag.
Correct.
So in a year like last year, where we do have these turbulent markets, how does a firm like yours navigate that?
It's a great question, because I think that when it comes to navigating through markets, you have to have your own process that's works for you and your firm, right? There's different styles and processes. Our firm, we go by a tactical process. We are rules based. We are tactical. We have a daily process that involves like basically asking three questions. When do you buy? What do you buy? When do you sell? And that process is what leads us to allow us to navigate through the markets and be able to opportunistically spot trends that are upward trends while mitigating and softening and protecting and defending towards that downside risk. And through that way of thinking and that kind of thought process, we kind of remove the emotion out of the equation. And
There's just a little bit of emotion,
yeah,
right? With investors, yeah.
Exactly, right? I mean, we're all still human, right? So what we look to do is just from the investing side, let's see if we can remove that emotion, keep that at bay, and follow a rules-based process that just keeps us on track. And by doing that, you could really implement a foundational risk management type of approach. And that's what we strive to do. And what I would say we've done very effectively for decades, for over 36 years.
Great. Thanks for diving a little bit deeper on that. Appreciate it.
Of course.
So now we're in 2024.
Yes.
Okay. So today, just for a quick timestamp, right? We are February 7th, 2024. So we don't know what the crystal ball holds for the rest of the year, but looking ahead, where is Ocean Park seeing things in, let's start with the equity markets. How are the equity markets looking, maybe some positive things or maybe some not so positive things that you're seeing as a firm?
Sure. I mean, I think what we're seeing strength right now. Equity markets are showing strength. They're showing resilience coming off of a strong up positive year in 2023. We walked into 2024 and the markets continue to push and move higher. There's been some good news coming out. Job numbers came out recently in the last couple of weeks in January. And what were those? I think we were expecting something like 100 and something, high hundreds. We got north of 1/3 of a million. We got somewhere north of 300,000. And that was a strong positive in showing that strength and resilience. There's been strength in earnings numbers coming out. So equity markets have been showing strength and moving and pushing higher. On the flip side, as you said, what some of the risks and some of the things that are happening, there's still question marks as to what are valuations getting stretched. Hey, we've been on a big tear up, like in fourth quarter of last year, 2023, and this year. How long does that go? I mean, there is right now. There's a lot of things that are saying, hey, like we can have, we're showing a soft landing, right? "Quote unquote" soft landing. Well, maybe there's even no landing. Who knows, right? We're not in the prediction game, so we don't predict recessions or things like that, or what the Federal Reserve is going to do with rates. But I will say the equity markets right now have been on a tear, and we don't know how long it lasts. We don't guess at that, but it does look like valuations are right now being stretched more and more, and still the uptrend's still in place. And that's what we see, and that's our allocations reflect that uptrend. You asked the question about the fixed income markets.
Yeah, that's like the other lane, right? And that's your niche. I mean, that's kind of your thing. So let's talk
Absolutely.
about it. Like, what does that look like for 2024? Are there obstacles? What are the positives there?
Yeah, I mean, it's a fantastic question, because like you said, since the 80s, our real niche is that we've been doing equities and fixed income since then. But why we love fixed income is because it's an area, it's a broad arena that is super important and for investors and for advisors that we work with in helping their investors reach their goals. It's considered money that should be more on the stable side. And like we said earlier, 2022 kind of sunk that ship of stability. We saw, that world get rocked pretty easily. We saw a year like 2023 last year where it came back and it showed resilience and strength. This year, as of earlier this week, I think the bond market was actually negative at the start of this week. I think it just turned. The equity markets, the stock market is in positive territory. The bond market earlier this week was the overall, and I think it turned just maybe like just literally yesterday. But what we see is we see a market where it's really hard to predict what's happening. I mean, if you look at just December, I think the Fed funds futures, they had the probability of a rate cut in March at over 80 something percent. Over 80% chance. Well, that number, less than 2 months later, the percent chance is less than 20%.
Right.
So
How do you keep up with it, right? Yeah.
Exactly. So again, these things are what we call intellectual noise, and a lot of things that are being said and spoken about in predictions. That's not the arena that we play in. We let that to the people that do that. We see that there is opportunity in fixed income. We do see uptrends. We are following them, and we are sticking to our process that's identifying them and participating in them. But at the same time, we believe that you've got to have your protection, which is why we have our defensive trailing stop discipline in place that can act and really, as you know, that our duck methodology in ducking out of the way to do that, to be able to navigate more effectively.
Yeah, I think the noise is a good point to bring up. It's funny, it reminds me, just last week, I had a client who recently retired. And, I'm talking on the phone, I'm like, how's retirement, right? Like, is it great? Is everything fun? And he's like, yeah, but like, are we okay? And I'm like, what do you mean? He's like, well, I'm watching the news. And when I told him, I go, how much news did you watch? And he's like, not a whole lot. I was working. I'm like, right. I'm like, it was always this crazy. You just didn't notice because you were working. So the noise is out there and you can't react on it. And I think, that's a big part of what we tell clients. It's obviously a big thing that you guys, do. So I appreciate you chatting about that. Let me ask a question though on noise, because it is something that we get a lot of questions on. It's an election year, right?
Yes.
So people get a little squirrely, right? What's going to happen? Like, if a Republican comes in, or if we're a Democratic, like, should I be doing something different with my money because it's an election year? without a crystal ball again.
Yeah.
And
Wait,
like-
let me, did I leave it somewhere? I left my crystal ball at home.
And noise aside, you know, can we talk a little bit about election year trends? Like, are there trends? Is there something that people should be worried about? Is it really just a lot of noise? Like, what is your firm's thoughts on that?
That's the question, right? And it's a fantastic one because it's on everyone's mind, right? It is an election year. There's a lot happening. There's a lot of division. There's a lot happening, and many believe there's a lot at stake. So the emotions, once again, going back to that point, the emotions are running high, which is all the more important within your investing discipline to keep that at bay. So what we see is, and the stats that I've seen are during election years, actually, like a lot of different pieces that I've seen come out in data points show in general very positive years. In general, election years that have occurred, not always, but in general, very positive years. And there's different data points, whether you're a Democrat, a Republican, independent, but showing whether it's the same incumbent coming into the office or getting reelected, or a person of the other party coming in. And the data points are all positive. In the equity markets, you've seen strength. So history tells us we're going to be okay.
Right.
That's what history does.
Take a deep breath.
Take a deep breath. I would say
take a deep breath.
Take a deep breath. History, that's what history tells us.
Yes.
Okay. With that being said, anything's possible.
Sure. Right.
So I think what we see from where we sit, and when we work with our financial advisors, and what the conversations I hear that advisors have with their clients, is that they have these plans when they put them in place and sticking into them, and the components to be able to, again, capitalize on upside opportunity while simultaneously being able to properly play your defense, right? It is a little bit of a balancing act of having your cake and eating it too. I think I think it's important, right? And I'm one of those guys. I'm never a fan of the expression "you can't have your cake and eat it too," because what's the point of cake anyway, right?
The guy likes dessert.
Exactly. I want to go with the dessert, right? There's nothing wrong with that, but it is, and it's a balancing act. And I'm not saying it's easy, but that's why it's so important to be working with a quality financial advisor and having a plan in place and different tools that can be used in the toolbox that operate maybe in different lanes to reach those goals.
Yeah, I mean, it's the Canadian too. Jeff Armini and I were just talking about, clients and like expectations, and, everybody wants to participate to the full extent when the market's going up.
Yes.
But nobody wants to participate to the full extent when it's going down, right? Which is why we do, as many of you listening, I'm sure know, we have a different approach, with that bucket approach, and positioning assets depend on when we're going to use them, and using different tools that operate in different climates, right? Whether the market is up or down or anywhere in between. So
exactly.
Awesome.
Proper allocation.
All right, so no crystal ball.
No, unfortunately.
You like dessert, but
yes,
you can't have it both ways.
But sometimes you can.
Right. So thanks for coming in today. I really appreciate it. This was a lot of fun. Hopefully for those of you listening, you got a couple little tidbits. Maybe if you were feeling a little squirrely, you've taken a deep breath. As we said, take a deep breath.
That's right.
And continue to follow us, subscribe, and as always,
go Bills.